Thanks everyone for joining us today. My name's Tim McCarthy and I'm one of the directors here at Sage Business Group, and I'll be your moderator and co-presenter today. What we're doing today is we're using Zoom, and for those of you who actually are new to this webinar environment, which has been going on now for a while, we just want to show you a few features here. So today, if you need to change cameras or video or audio, there's audio settings there. If you've got any questions to ask during the session, just use the Q&A button there and ask us questions during the session. And hopefully no one chooses to leave the meeting, but if you do, all you've got to do is click on the little button there and you can leave the meeting. But hopefully you're here for us for the next, say, half an hour, 45 minutes. And we're looking forward to that. To get it going, as I mentioned, my name's Tim McCarthy, and I'd like to introduce to you our lead presenter today, Michael Osborne, who some on the line will already know. Michael's a fellow director of mine at Sage Business Group, and he holds a key role of being the CEO of our business and has seen the development of our business from what it was, being accounting and tax practice, to where we are now. Specifically, though, Michael's worked with a lot of trade-based businesses, and being located where we are, our client base, there's a significant portion of clients who are tradies or they're involved with tradies. And so Michael knows that inside and out. He actually spent even some time in his previous time doing some landscaping, so it comes from both fronts. Today, what you'll see is a person who's got great insights into how to grow your business and how to make sure that sustainably you can have the business that you want to have. So with no further ado, it's over to you, Michael, and away you go.
Thanks, Tim, for that generous introduction there. Certainly, yeah, I did venture into landscaping for a very short time, but yeah, it was a great time. Yeah, welcome everyone, and looking forward to going through this session with you today. And I just want to touch on one word that Tim said there, sustainable growth. We can all do things that are band-aids, but we need to be maybe looking at things differently to make changes that bring about sustainable impacts on our business. So I'd like to kick things off with some wise words from Thomas Jefferson. And for those I'll read them in case you're in a position where you can't see it. If you want something you've never done, you must be willing to do something. Sorry, if you want something you've never had, you must be willing to do something you've never done. Now, these words were written probably 230 years ago, but they're as true as today as they were then. So this session today is about challenging you to do something different in your business so that you can get the results you've never achieved. And my first challenge I'm going to get you to do is reread that quote, but where you see the word you, I want you to put the word I. So again, I'll read it through. If I want something I've never had, I must be willing to do something I've never done. Really important to use the words I, because then we use it a lot in our work here. It means you're taking ownership as opposed to passing it off to someone else. So we're going to run through the agenda in a minute, but a usual disclaimer to say that the information that we're providing this educational webinar, it is general in nature, and it's no substitute for tailored advice. And it is going to be high level because really this is an adaptation of our 90-minute to 2-hour in-person presentation. So it is going to be high level. It's designed to get you thinking because you know your business best. Let's be honest. You know your business back. That's why you went into business. You're great technically, so you thought, I'll make a business out of it. So you know it best. We're going to cover off the need to make change, but you've got to choose to make change. We're going to have a look at developing a roadmap and a dashboard for your business. We'll then get into the 7 ways to grow your business, and then Tim will show you a worked example which demonstrates how you can make seemingly small adjustments to your business, but the compound effect on the bottom line and your cash flow can be very significant. Then we'll get down to accountability time, and that's when you have to decide what action you're going to take as a result of, giving up some time today. If you've got questions during the webinar, send them through, as Tim said, and we'll make sure we'll do our very best to get them answered by the end of the session. So let's get into it. Now, no doubt, we've been through a lot lately. And for some businesses, this pandemic has seen a major impact on the way we conduct our businesses. And no doubt there would have been some changes that needed to be made along the way. And I'd imagine there's some more changes that have to be made. But change just doesn't happen. You have to make the choice to change. You're in control of how you respond to the crisis going around you. Generally, it's a 5-step process. The first one is that you need to be aware that you need to change. For most of us, it's unlikely the business has been able to continue as normal, and we do need to make those changes. So you need to be aware. The next step is that you've got to accept that you need change. And for some of us, that might not be easy. If we've been doing things a certain way for a long time, accepting that there has to be a change, going to be pretty tough. But you know what? The alternative of not changing, that's not going to be, it's not what we're after. Now, if you've accepted the change, then you need to take action. What steps do you need to take to enable this change? Most people get stuck here. They fall into what we call FTI, failure to implement. Writing things down, taking action, assigning accountability against those actions is really important. We tend to respond to immediate actions while we're in crisis mode, but sometimes fail to take the action that's required to make sustainable change. And an example of where this may be happening, you could be looking back, if you seem to be putting out fires the whole time, then maybe we're just having to do things to, for those urgent actions right now. And a little tip for people who've been in business, and it's no different for us, most of those fires you're putting out probably been started by yourself because of this inability to accept or see the need to change. So to make sure you do take the action, accountability is required. Being held to account by someone independent really helps you make things happen. And finally, take the time to acknowledge the change that you have done, that you've actioned. If you've got a team, involve them. If you don't have a team, that's fine. Acknowledge it yourself that you've made some change. It's really important. Now, before you can make a plan for where you want your business to go, you've got to understand where your business is right now. Your point A. Now, COVID-19 may have meant that you're maybe further away from where you want to be. There are a few cases though where people are closer to where they want to be, and that's great for them. But their point B, they need to determine where they want to go. They also need to determine where they are right now. And Tim, I know in our business, we use it, and plus when we're working with clients, we use a concept, the now, where, how theory. Do you want to maybe touch on that a little bit?
Yeah, sure. So now, where, how is really based around those 3 words. Understanding the now. So my position now is here. I have this amount of money in the bank. I have this amount of assets. I have this type of lifestyle. The where is, where do I want to get to? So where do I want to get to in terms of financial freedoms? Where do I want to get to in terms of my time? How do I want to be using that? And the how is taking you from the now to the where. And that's where we step in with our clients and say, okay, you've identified the where you want to be. We know now your position. Let's work the gap in between. And that's what it is. It's really the how is the piece where we work with the client significantly to achieve that where, but you need to work hard on determining the where. Imagine driving somewhere and just not know where you're going. That's why the roadmap's critical.
Absolutely. And we can work through with you, because a lot of times people don't know what their point A or their now is, or their point B or their where is. So certainly working through that together can sometimes help. But do you know where that now or that point A is? Where are your goals? What are your goals for point B? And essentially, it's going to be a journey, and that journey could deviate quite a little bit to get there. We'll actually look at a visual version of this, if you like, when we look at the growth equation. So we'll get onto that. So where you are now and where you want to be as a result of COVID could mean that you need to revise a plan. Now, I'm hoping that most people have a business plan. If you don't, step one is get one. And I'm not talking a 34, 40-page business plan that the banks like to see. I'm talking a one-page business plan that really drills down into what you need to do as a business owner in the next 1 month, 3 months, 12 months, 5 years. Really succinct and to the point business plan. Some of you may have one, and that's great. So you might just need to tweak it a little bit as opposed to creating one from scratch. And for those of us out there that have been really impacted by COVID-19, you might have to sort of go away from a business plan to what we call a business recovery plan. And we can help with any one of those as well. But you'll also need to establish your most critical key performance indicators or KPIs. And you've got to monitor these to make sure whether you're on track or off track. And Tim will go through some of these in a minute. You'll have to look at your personal budget to see where you can reduce pressure on your business's cash flow, where you need additional finance, and where, really importantly, if you don't already know, where's your break-even analysis? At what point in time of the week, of the month, do you actually break even and you've covered all your costs and the rest of that period is then making profit? You need to know that. You've also identify the risks in each of the various departments, because your business, whether it's big or small, has various departments. It has an operations where you do all the work. It has a finance where you issue invoice and collect money. It has a marketing department where you try to get more work. It has a sales department. You might realize it, but you've got one. So you need to look at the strategies in each of those departments as well, and set 90-day and annual plans for each of those departments. Break it down. So I mentioned before about a budget, and some people's eyes glaze over when we get to a budget. So I'll get Tim to run through one way of creating a simple budget. Tim, over to you.
Thanks, Michael. So what we're looking to do when we're creating a budget is there's two ways we can approach it. We can approach from the top down or the bottom up. Well, we see that your business is an extension of you. So therefore, your business is there to serve you. We'd much rather work from the bottom up, and that's what I'll go through here with you. So in that sense, when we're first working out a budget, let's talk about the profit you need. What profit do you need your business to deliver so that you can have the lifestyle and live the way you want to live? I'm going to work our way up from that. So in this example here, in the past, you may have had a profit of $150,000, but the reality is set in over the last 18 months or so that challenges have happened and lockdowns have been on you. And the profit target, you'll be revising it. So say, look, we have to chase our profit targets down to 130,000. Even that's going to be a challenge for us. So let's work our way up from that. So then what we do is we look at our overheads. Now with trade-based businesses, we're looking at two specific types of overheads. There's a general overheads. So let's say your general overheads were $170,000. You stripped and saved, you looked at the cost, you looked at things like your electricity, your various costs around the business, and you've been able to get them down from 170 to 145,000. The other cost you have is direct wages costs. And direct wages are the cost of the people who work for you, which a lot of people want to tell us that they're variable costs. They're only variable if you put off people every time you don't have work. Otherwise, they're a fixed cost. So let's say in this example, you've got guys working for you, girls working for you, and you're committed to keeping them all on, keeping them on the same salaries. So therefore, we've got $180,000. So we know what our profit target is. We know what our overheads target is now. We know what our direct wages is. That gives us a gross profit target. In this case, it's gone from 500,000 down to 455,000. We know our cost of sales. That's what we need to know. So if our gross profit percentage is 39%, then in this scenario, our sales target's gone from 1.282 million to 1.166 million. The key here is that this is overarching. It's only a very high level. And what we would do in a full budget is really break these numbers down a lot more, particularly around the overheads, targets. We'll talk about the 7 ways to grow your business in a moment, and that will be how we look at sales. The really important thing is this is high level, but it's here to service you. So all of a sudden you've got a budget, you've got some targets and the like, and you know where you're going. But you know what you want to achieve? It's time to have a dashboard. And a dashboard, we're going to use a bit of a car analogy on the way through here. So if there's anyone on the line who's a mechanic, we'll be embarrassingly poor, but I apologise for that. So the dashboard for the car, though, as a rule, gives you how fast you're going. It tells you how hot the engine is, how much fuel you've got left. It gives you indication about whether or not you're going to make it to where you're going. It's the same in business. Essentially, these measures, they're here to tell you if you're on track to achieving your plan or if you're off track. And really, 4, 5, 6, 7, that 7 maximum is all you need for KPIs. Most people are better off to have 5 solid KPIs because they can measure them. They can manage them and can improve them. That's the key. Any KPI we're going to go through in a moment, you want to be able to capture the data, you want to be able to monitor it, report on it, and critically, you want to be able to improve it and have the power to improve it. And where it starts from is knowing what you're measuring. So things for trade businesses, it could be gross profit percentage. Hey, what does it cost me for each dollar that I make in direct costs? Lockup days. Cash is critical. So all of a sudden we can be making profit. But if all that profit is on the shelf or it's in debtors or it's in the factory, that's no good for cash. Labour to gross profit, one of the big inputs in trade-based businesses is our labour cost. What percentage of our gross profit is going to labour? The average job value. Now, for some people, this is important. For some people, it's not, depending upon the nature of your work. But it may well be that you want to measure what is the average value of a job. Inquiries per month. How many times does the phone ring? How many emails do I receive? The people who want to do jobs. Now, we'll put a rider on this and say job inquiries of the type I want per month, not just anything, because you might get some rubbish as well. And then from that, look at conversion rates of the inquiries I'm getting for the jobs that I want to get. How am I going to convert them? Am I winning half? Am I winning 10%? Some businesses have estimated their whole job is to actually convert. And monthly overhead cost is really important. Know how much it costs you per month to open the doors, even if you don't have 1 cent of sales. This week I worked through an example with a client where his simple question was to me, so to get me through to Christmas, how much is it going to cost me if I don't get 1 cent of income? We needed to know his monthly overhead cost to be able to talk through the cash flow of that. So those dashboards are really critical. They're not always in your financial statements, but they're numbers you can obtain from your business. And that's what you should be looking for all the time. And to do that, you want to work with some people. So I'll swing back to you, Michael, now and tell us about that.
Yeah, thanks, Tim. Really important, those KPIs and the key performance indicators that you measure. Tim mentioned there, if you can measure it, you can improve on it. So that's half the battle, is being aware of what they are. Yeah, look, and when you've got your goals and when you've got your KPIs and you've got an idea of what actions you need to take to grow your business, do you have someone there to hold you accountable for what you've committed to? Who are you most likely to break a promise to? Don't say your partner, it's yourself. Honestly, we can make up the best excuses to justify to ourselves and others why we didn't do what we said we're going to do. So get yourself someone to hold you to account. And you've got to look at it. Do you want them to be tough on you, or do you want them to be soft and say, they're there? There's different types of accountability as well. So remember that those 5 A's of change, one of them was accountability. And when I'm talking about spouses too, the idea of having your spouse or someone you love hold you to account generally doesn't work. Independence is the key. So if you need to talk to someone about that, certainly talk to anyone here. So to summarize, if your business is the vehicle that delivers to you what you want in life, then the top 4 things you need to do right now to make sure you get to your destination are: 1, set that annual plan if you haven't already done so. 2, part of that plan should include an annual budget. Tim showed you a very high level of how to set one, and I'm sure most people have got some form of budget. Most of it at the time, though, it's in their head. So get it down on paper. 3 is set and measure 4 to 5 of your most important KPIs, things that can tell you in an instant if you're on track or off track. There is no point knowing this information 18 months down the track when you get your accounts done. You need to know it now. And finally, have someone hold you to account. We did. Tim mentioned that, we've been able to take this firm from a basic accounting and tax to multidisciplinary financial planning hub. We'd like to think we did it ourselves, but we had accountability. We had someone coaching us, keeping us on track, questioning us as to why we're doing things a certain way, and basically keeping us honest. So really important. So before we get on to the 7 ways to grow your business, I just want to go through this concept and for you to understand the marketing flywheel. Now, what we're going to show you here is probably nothing new to everyone. Understand that, but it's really key to understand that there are 3 ways of learning something, and one of them is audio, so you can listen. One is visual, you can see, and the third is kinesthetic, where for tradies it's basically doing that you learn. So this is just a visual presentation of something you probably already know. The marketing flywheel. This concept shows you how to attract and engage and delight your customers, and demonstrates that you shouldn't just focus on gaining new customers, but you should also focus on really delighting, if you want to use that word, your current customers. And I'll show you why now. First of all, we have strangers, people who haven't heard about your business. Now, we can do some marketing to introduce our business to these strangers, who hopefully then will become prospects. Now, those prospects have the opportunity to buy from us. And when they do make a purchase, they become customers. So if we treat them right, look after them, these customers generally will become our promoters. And the more promoters we have, the more people that are out there speaking to other strangers about our business. So the cycle continues. Now, in order to attract prospects to our business, we need to provide value, obviously, before we start extracting value from them. Now, think about what they'll get from doing business with you. What will our strangers or prospects or customers get from doing business with you? What do you do differently to your competitors? Most of the time, we are problem solvers. We don't sell something, we solve problems. That's important to remember. So we convert these prospects into customers, and we've got to engage with them by making it as easy as possible for them to buy from us. Don't put up barriers. And marketing is what attracts these prospects and hopefully turns them into customers. And that's through our sales process. And that's there to ensure that our customers continue or clients continue to be engaged and are followed up with really good service. As I said before, delighted customers will share their feedback with strangers and create more prospects. So the aim is to keep this marketing flywheel spinning as fast as possible, converting more strangers into prospects, and prospects into customers, and then in turn providing great service again. So I really want you to understand that following this process is essential to growing your business. Really important, and it really flows into the 7 ways to grow your business. So let's have a look at the 7 ways to grow your business. Now, what I'd like to preface this section by is I would really ask people to take out of their mind the thought, oh, this won't apply to me. It may be the case, but I'd really like you to replace it with, how can I apply this to me? The concept is universal across all businesses. It's just sometimes one of the 7 ways, or 3 or 4 of the 7 ways, are more critical to a business than others. So let's get into it. The first way to grow your business is through increasing your customer retention. It's so much cheaper to make a sale to an existing customer. I think that even the stats show that it's up to 6 times easier and cheaper to make a sale to an existing customer than it is to try and attract a new one. So by delighting our customers, we want to make them return, therefore increasing our customer retention rate. So what do you do to delight your customers or to solve problems for them? Here we've got a pretty simple people. We've got a very simple principle called FGG. F stands for find out what they want. The second F, so FGG, the G is go and get it. And the third G is just give it to them. Find out what they want, go and get it, and give it to them. But you've got to find out what they want. So increasing customer retention is all about that, giving the customers what they want. Second way to grow your business is to generate more leads. And of course, we went through that. The best way to generate more leads is to really look after your customers so that they become promoters and provide you with more leads. You can't purely rely on existing customers doing your marketing for you. So you've got to do something yourself to attract strangers using various marketing strategies and providing value, solving problems for them. Free downloads from a website about something to do with your particular business. Show them that you're there to solve a problem for them. Now, the third way to grow your business is to increase your conversion rate. Tim touched on it before when he was looking at the KPIs. You measure how successful you are at converting leads or your quotes or your proposals. You regularly review why you're not converting more. If you've got a team around you, is someone better at converting leads than another person? Learn from them. You should be monitoring the conversion rates. But key to doing that, and everyone knows this is being the case, of course, that if you've got a big proposal that you need to run by someone, make sure you're dealing with the decision maker as opposed to the gatekeeper, because you're dealing straight with the person who will make the decision. Another way to increase conversion rate too is give the customers a range of options, so that what that does is that the question becomes which option should I buy as opposed to should I buy from you. The fourth way to grow your business is to increase transaction frequency. Now, as I said before, it's much harder to sell to a new customer than it is to sell to an existing customer. So it makes sense to encourage the customers to buy more from you. Now, I get that in some trade businesses that's not possible. If you're building a house, they're not going to turn around and build another one with you. But so that's great. Maybe you could concentrate more on getting referrals from the people you're dealing with. But in other trade-based businesses, you can increase your transaction frequency. Again, take out that doesn't apply to me and replace it with how can I get this to apply to me? The fifth way to grow your business is to increase the transaction value. Now, this doesn't necessarily mean bumping up your prices. Think about how you can add more value to your customers. As I said before, can you provide them with a range of options? Do all your customers know everything that you offer? Don't assume they already know. Tell them what you do. I mean, the greatest exponent of this was Macca's. Would you like fries with that? They increased the transaction value there and then, giving them options. On the flip side, please try not to offer discounts. It really has an impact on that margin line that Tim was talking about. And you end up having to sell a hell of a lot more just to get that level of gross profit that you need to run your business. The sixth way to grow your business is to reduce your variable costs. Tim already touched on that a little bit. And these are the costs which increase as sales increase, such as your direct labor, your cost of materials, your sales commissions if you're paying people a commission to give you leads. Implement better systems to accurately record the time that you're spending on those things. And don't be afraid to ask for better rates from your suppliers. If you don't ask, you don't get. And that applies to the final way too, to grow your business. That's reducing your overheads. That's going through your line by line item on your expense report. If you use Xero, have a look at your Xero reports or whatever program you use, and look at each line and say, can I get a better rate for each of those overheads? It's amazing what just reducing 1 or 2 or 3 or 4 items does to the bottom line. So they're the 7 ways. And again, in keeping with there are 3 methods of learning, we're going to visually now go through an example of those 7 ways. And I'll hand back to Tim. Tim, can you take us through how each of those apply to a trade-based business, and just the impact that just tweaking little things here and there can have on the bottom line?
Absolutely. Thank you. Thanks, Michael. And those 7 ways you've just been through really do drive the ability to grow the profitability of business and grow the sales. There is actually no limit on how much you can make your sales. You can only reduce your costs to 0 at best, and reality is probably more than that. There is no barrier to sales. So what we're going to go through here is a growth equation. I really want to stress that point that Michael's touched on before, is that not each of these ways will work for every tradie. And the reality of this business we're going to show you here is a mythical business. It's not real. The point we want to take out of this is don't worry about the numbers, worry about the concept, worry about the fact that little changes make big differences. I'll try to pick up a few of those on the way through. So what we've got is a business here with 765 existing customers, and they retain 85% of those. So therefore, they retain 650 customers. They get 145 inquiries per year, convert half of those, so they're getting 73 new customers. So therefore, they've got 723 customers. They do 1.1 transactions per year. Transaction value is 1,560. Therefore, the sales are 1.24 million. They've paid 70% cost of sales. Their expenses are 265,000. And where that leads us to is a net profit of 107,000. Now, if they've got a business, there's a saleable business, which some are and some aren't. And let's, for example, say the valuation model is a 3 times model, which is a concept that some will be across and others it's irrelevant to. The valuation of this business becomes about $320,000. So that's a solid business. And this is the point. Most businesses, or a lot that we work with, are good. That's an honest business, making some money for the effort they're putting in. What we want to help our clients do is how can they make their business better? How can they grow their business? In actual fact, we've got a webinar coming up in a few weeks' time about building a better business, because we want to make the businesses better. We're not saying they're going terrible. We just want to improve them. That's why we talk about KPIs. So let's work our way through examples of how we could improve, how we can make this better. It's the same business, but now the retention rate has gone up to 90%. So what's happened is we've made a few extra touch points with existing customers. We've made sure there's a customer loyalty program in place, for example. There's potentially a points reward systems. There's a phone call system that thanks customers for their work beforehand, whatever it is. That's gone up by 5%. Now, we know life's on beer and Skittles, and we're dealing with a time where things are challenging. So let's say, for example, the number of leads or inquiries haven't changed and the conversion rate has actually gone down. Okay. Now, that might be a result of really good marketing, because now the 145 might be better quality, and the 45% conversion rate may be actually a better result in many respects, because they're better types of customers. So 65 new customers, and therefore the total customer base now is 754 in this business. Let's say the transactions per year have increased by from 1.1 to 1.3 transactions per year. So for some tradies, for example, that might be, if you're a mechanic, being able to offer additional services that align with it, whether it be wheel alignments, for example, something like that. It may be they're going to come more often. The transaction value is increased. Now, in this example here, we've got transaction value increasing from 1,560 to 1,600. But that's just this context. It might be that you're building a house, you might be renovating. And one thing we see, transaction value happens a lot and way too often in these types of jobs is variations. We'll touch before on systems and documents. Make sure if you're doing variations, you systemize, you've got a system in place that documents the variation and gets it signed off. I just cannot get over how often it happens that's the variations that actually bring people undone. You're giving more away, but not receiving something for that. So in this business here, the sales have gone from 1.24 million up to 1.56 through better negotiations and the like with the suppliers. You might have brought your cost of sales down to 65%. It might be changing input material. It might be changing a supplier. It may well be better terms with your existing supplier. It may be paying people on time to get you a discount. And your expenses, though, again, not everything's perfect. You might have had to spend a bit of money to actually be able to put this in place, because the reality is it takes time, it takes effort. So it may be consultants helping you do certain things. It may be internally you've committed someone to a job. Whatever it is, let's say the expenses actually went up. And in this case, the business, the net profit has gone from 107,000. So lots of little changes, nothing massive, but lots of little changes. It's gone from 107,000 to 248,000. There's a profit improvement there of $141,000. Is it the sort of business saleable with a 3 times multiple? You've just increased the value by $424,000. That's not going to happen overnight, but this is a model that you can work towards. How can I improve my retention rate, my conversion rate, my number of leads? How can I increase the number of transactions per year, the transaction value? Improve my cost of sales? How can I look at my overheads and see what's possible there? And look at little changes, and not all being positive, but the impact they have on the profit and also the potential valuation of any business. It's a massive thing. And the growth equation is fundamental to seeing the where. We talked before about now and where. The growth equation is the where. The part that follows that is the how. How do we change from now to where through this? So that's how the growth equation works in a reality for a trade-based business. It works similar for any business, but tradies, think through what affects you. What are the things that you can actually move for your particular type of business?
And you're right there, Tim, that there's 7 ways to grow your business. But if, for example, 2 of them don't apply, fantastic. You only have to focus in on 5 now. And you can see there, we didn't touch in that example each of the 7 areas. So it's really important. And Tim was talking about that's the where. One of the and we've worked a bit with clients on using the growth equation. One of the things we've had to do up front was work out their now, which is how many clients they've got and how many times they come back. And yes, there's a bit of an assumption to make there, but that's really important too. So it's good to tie that back into that now, where, how. Tim, well done. So thank you. Hopefully people on the line have got a better indication of what it is they can do for their business. So now you've gone through all of that. You've got 4 choices. You can do nothing and say, nice webinar, fellas. You probably should do something a bit differently, but a bit too hard. You can retreat. And by retreat, I mean you might try a couple of things, but, we have a couple of bad days, a few more fires that we have to put out. And so you retreat back to just doing what you've always been doing. So third thing you might do is take some normal amounts of action. So you do a few easier things here, the low-bearing fruit, get some quick cash flow improvement. But have you fundamentally changed your business? Those quick wins can sometimes evaporate very quickly along with the quick cash that comes with it. Or point 4 there, take massive amounts of action. If you decide you want to fundamentally change your business because it's there to serve you, like Tim said, not the other way around. There is an old saying, we'll go way back, I suppose, and you've probably heard it. If you do what you've always done, you'll get what you've always got. You know what? I'm not quite sure if that rings true anymore, because are your competitors just doing what they've always done? If they're moving ahead and you're not, and you do what you've always done, I think you'll end up with less. And as our old friend there, Albert Einstein, said, insanity is doing the same thing over and again and expecting different results. So they're your options that you've got there. So how can we help you? Well, obviously, we've said that the business planning is really important. And as I said, not the 46-page one, the 1-page business plan. Hopefully, you've got something, but if you haven't, And everything is different. Every client is different. They've got different versions. Some may have, and some we might be starting from scratch. So if you're interested in helping you with a business plan, please just call us and we'll work through that with you. We've got quarterly performance sessions where we catch up and we essentially go through the growth equation. We determine what is your now in the growth equation. Then we look at where you want to go, and then it's determining the how, but then we wrap some accountability around that as well. 90-day action plans. Who's going to do it by when? What are the consequences if you don't? Depending on if you want hard coaching, soft coaching. The growth equation example snapshots, because we normally do them live. If you want a copy of them, we can shoot them through to you for free. And we would love, you've taken the time out of your day to listen to us. Again, we'll take the time out of our day and give you a complimentary meeting, whether it be half an hour or so, 45 minutes, about your business and where you would like to take it. So again, just get in contact with us and we can run that through with you. So I don't know if we've got any questions, Tim, that have come through. Can't see any, but that's fine.
Did you get one in the chat box?
Oh, yeah. Yep.
And the question was, and it's probably a really good one for you, Michael, is did you do this for your business, which is followed by what prompted that decision? Why did you, if you did this for your business, you mentioned that, which you mentioned earlier on, we did do it.
Yeah.
What prompted you to actually take action?
What prompted me is that I was constantly putting out fires, but I was the one lighting them as well. And I thought, if we wanted a business that worked with or without us in the business, then we needed to do something differently. Accounting practices are called accounting practices, and I know why, because I think we practiced for 25 years. And then it wasn't until recently, or the last 10 to 15, I suppose, that we thought, no, we need to change. I need to change. So it was more creating a business that would give me the time freedom, and not just me, because it's fellow directors, it's the team. We wanted to create a business that gave everyone the time freedom, the financial freedom that they desired. So something had to change, and that's what it was. I went through those subconsciously, those 5 A's of change, and we did it. Hopefully that answers the question.
Fair to say we haven't looked back.
Yes.
Excellent.
We haven't.
Thank you. That's the only question we had here.
Yep. Oh, well, so as a parting thought there, I'd really like you to make a simple plan today. Just commit to at least 3 actions that you'll take as a result of today's webinar. Write them down, commit them to writing. Give each of them an owner and the completion date. Remember, failure to implement. Most of the time it's because we don't write it down and commit in some way of getting those things done. So in all of that, we're here to help if you need. I think, Tim, more than happy to have a chat with anyone afterwards. So, but I think as our parting thought there, it's consistently applying basic fundamentals, in the words of Jim Rohn, but it's just consistently doing things. Thank you, Tim.
Thank you, Michael. And I know you put a lot of work into putting this together, so thank you for doing that. And just as if anyone wants to, is on the line, if you do want to really commit and set at the first step of accountability, why don't you email Michael or I? That's just tim@sagegroup.com.au or michael@sagegroup.com.au. Those 3 actions, because you've just invested 45 minutes of your time. We want to make it really valuable. What are the 3 actions you're going to take? Who's going to take them? And when are they going to be completed by? If you're up for it, just email them through to us as a first step of accountability, because that's one step towards us supporting you to the business that you want to have. So thank you very much for joining us today. We really enjoy these sessions, and by all means, spread the word to people who are there. For those who are in your own business, we really hope this helps you grow. For those who are contemplating business, we hope it's helped you think about how business could look for you moving forward. So we wish you all the best. Sorry, Michael, you were going to jump there.
No, all good.
Oh, that's okay. So we wish you all the best with that. Love to hear your feedback. Love to hear your commitments, and look forward to seeing you on the line in future webinars as we continue this over the next coming months. So thank you very much.